Hello and welcome to our YouTube channel wishfin.com. Hi, myself Vikas, and today we will discuss home loan interest rate conversion. Before we go any further, it's important to understand the types of home loan interest rates that exist in the market. There are basically two types of home loan interest rates available. One is floating and the other one is fixed. A floating rate loan will mean there will be a change in the rate of interest throughout the home loan tenure. As and when the RBI changes the repo rate, the changes will happen in the interest rate. For example, when the RBI cuts the repo rate, the interest rate will come down. When it raises it, the interest rate will go up accordingly. Well, the EMI amount won't change unless you go on to do a part prepayment or a balance transfer later. But you can choose to pay the same EMI even at such times and save more as a result. But what will change automatically with the change in the floating rates is the change in the proportion of interest and principal of the home loan EMI amount as and when the RBI changes the repo rate. This is about the floating rate. Now let's get to fixed rate. What does it mean? Well, the name itself defines it. There won't be any change in the rate of interest throughout the loan tenure. So it could make you believe that it is a better option than a floating rate, but it's not the case. The fixed rate loan will have an interest rate of 3 to 4% more than the floating rate and could well make you pay much more than you could ever think of. So if you are into a fixed rate, you got to get it converted into a floating rate by paying a conversion fee to the lender, which can be a certain percentage of the outstanding loan balance or a flat amount. Obviously, the GST will be levied on it. For example, if you talk about SBI conversion rate, it is around 5,000 plus GST. Someone else could charge a different amount. So it will depend from one bank to another. So you got to, look at the offers carefully and choose the plan accordingly. This was about conversion from fixed to floating. Now you will know how to convert within different floating rate benchmarks. There are different floating rate loans available in the market. There is a base rate home loan, then the home loan could be also on an MCLR or the new age Repo linked lending rate. Of the three, Repo linked lending rate ensures the highest transparency in the transmission of RBI rate cut benefits. For example, if the RBI cuts the repo rate by 0.30%, the interest rate for our Repo linked lending rate based home loans will come down by 0.30% and no less, compared to base rate and MCLR, where the rate reduction could be to the tune of 0.10% to 0.20%. So there is a deficiency in those two systems. And if your home loan is on a base rate or an MCLR, you need to get it converted into the new age RLLR, that is Repo linked lending rate. This will ensure greater transparency in the transmission of rate cut benefits and you could save a lot of money. This was about home loan interest rate conversion. Wishing you all a happy home loan interest rate conversion experience. Hope you have liked our video. Thanks for watching the video and stay connected with us for plenty more insights coming your way.